All right, traders, welcome to today's recap. This is Christian from Hertz at Trade Group, and it is September 17th, Tuesday. So we have one more day or half a day until the Fed meets. The market's traded in a pretty tight range all day today. It kind of just seemed like they were going to lull us to sleep a little bit today. Going back and forth on the top of the value area like a ping pong ball today, which is just sometimes the case when we have an important event that the market is waiting for. But interesting. We something glad to see the market kind of pop out of value today to kind of give us a reason for. I don't want to say a reason for coming in today because there was a lot of movers today in individual names, which made it kind of a little bit of a fun day today to trade. But for the overall market, nice move there at the end of the day, and really nice call by one of our subscribers today. One of our members was talking about the Qs and said, "Hey, the Qs could possibly get to this version point of control on the 5 minute bar." And sure enough, these are really good. I try to give an example like this and not spend all the, not spend countless minutes going over version point of controls on the videos. But I'll tell you, they're really good. I think when I put them on Twitter, people think that I draw them after the fact, but they're not. They're just really good areas. They're like kind of pivot points where there's been a lot of volume before that once you get out of range, right? Once you get out of range for the day, this is what's basically known as in range or in value for the day. Once we get out of that, for whatever reason, price will just search out one of these high areas of volume that it hasn't seen before. It's not a magic trick or anything like that, but at this point, right, this was the where the majority of volume occurred 2 days ago. So it's the market just it has a memory. Price has a memory. There's a lot of things that drive it. Algos and so forth, which I don't like to blame for anything, as a lot of people seem to do on Twitter. But they seem to kind of go after levels that are important in the market. Anyway, this was taken out, right? There was one down here that was taken out too in the Nasdaq, in a reversal off of that. So it's just funny how that happens, especially to the extremes, right? I mean, this one was not extreme, but the second one that we saw yesterday was extreme. Notice there's another one that lives down here, but sometimes they can just kind of stay active for a while. But at the very least, great call by one of our members saying, "Hey, watch this version point of control, this VPOC up here." Again, we call them VPOCs for short, but version point of control. They're really key in kind of helping you look to take targets at levels and kind of pinpoint where you think price could get to, even before you enter into a trade. So I wanted to talk about this one thing that happened today. I'm not an expert on the repo rate, but if I can try to kind of help a little bit. So what is this thing, right, that we're looking at, the repo rate, and we've got a lot of questions about this. I try to give it a little bit of attention. So we'll see. So this is kind of I was going to say a blank show of something that I guess that happened with the Fed. With the repo rate is what happens is banks will lend to themselves and to the Fed at a specific rate. And if I'm butchering this, if I'm saying something wrong, please feel free to correct me. But it's a very short-term rate, and what happens is you're allowed to, if you're an institution, you're allowed to pledge very marketable securities, short-term securities, just for an overnight rate, right? So like mortgage-backed securities, like commercial paper, that kind of thing, like really, really short-term, like almost cash equivalents. So you shouldn't ever see this unless something really goes wrong. So I don't know. We'll see if if we hear more about this. I would assume that Powell will get a question on this because the Fed had to actually intervene here, and they said tomorrow they will be doing this again. They also mentioned when they tried to intervene this morning, or conduct operations, that they said that there was a technical glitch too. So it seems like something's funny going on. So the reason why people are paying attention to this, and probably something that you haven't heard before, because this rate went nuts back in 2008, 2009. So you know, just uh, keep on. I don't want to say keep on alert for this, but if we don't hear about it again, perfect. If we hear that something is happening for a couple days, something's not right. But what they blamed was the reason why this rate went like this. Again, this should never really happen unless something really goes wrong. Um, but they basically said that it was a combination of, you know, some treasury paper coming expiration, as well as quarter end tax payments by corporations, that triggered this. So again, if it's a one-off and if it's a glitch, so be it. But if we hear about it for like another couple days, something's not right in the system, and there's stress in the system. That's the main thing. So again, I wanted to cover that and give you my opinion, because I always like to talk about this stuff, because the market isn't just buy the dip all the time. If there's something bigger that we need to be aware of, uh, so be it. And if the market is giving you a warning sign of some sort, you want to pay attention to them. So again, I don't think that is this yet. We'll have to see if this resurfaces for the next couple of days. Then we know that there's a problem in the system. Again, just learning from experience from when I traded institutionally back in 2007 to 2009. There was a lot of things that were like you didn't understand. There was head scratchers. So anyway, I'll move on. But that's this. So let's talk about today's price action. It was interesting. It seemed like momentum names kind of came back into the picture today. Something's really got going today. So nice to see that. It's basically the way that this happens. It cycles, right? There's not always like last week obviously we saw this big rotation into value, some just other parts of other sectors, which I spent a lot of time last week talking about. But once things get cheap in the growth area, money circles back to those areas because they become attractive again. Snap had an enormous day, up 6.8%. Congratulations if you caught this. A couple traders in the room caught it today. Great job. Notice, probably a nice day to take a little bit of profits, considering that it made its way through value. Again, another way to use the value areas or the value area indicator that we use is that it's, not only the verging point of controls, but also when things are moving through value, that's known as what we like to call, and I don't think this classifies because we didn't start the period below value, but you made it all the way through value, right? Price made it all the way through. So, like I said, it's a good place to take. Again, don't have to necessarily take the trade off, but take a target at the top of value and then mess with the profits at this point. The solar names were moved very nicely. I've been owning the TAN ETF for a while. I've been just basically holding that. I have it actually. I own it in a couple places. It's in the Tribeca. It's in the TTG tactical portfolio as well. But First Solar had a monster day, as well as a bunch of other names in the group. SPWR. Again, moved all the way up to the top of value. So very similar, like Snap. That's a place to basically take money off the table, in my opinion. But then also some of these other names did pretty well. ENPH, notice that this ENPH filled the gap, and then SEDG also, even better than ENPH, was up 4.7%. So really nice. The solar names, if you look at today's performers, up 3.35%, basically all after the open. So gave you an opportunity to kind of get in to some of these names. The gold miners did pretty well today too, so something a little bit different. The Chinese internets did well after the open. They started the day in the red. Again, a lot of groups in the green. The Qs, which we already talked about, was the best out of the major indices to as far as what it performed during the day, from the open as well as for the day. Uh, Interesting, everything that was talked about yesterday for all the energy companies. Even though all kinds of chasing in terms of option activity, which we did see a lot of that in the afternoon. Those gave back a lot of gains. We talked about this quite a bit, yesterday. It's really, I'll tell you, it's difficult to know what's going to happen, right? But one of the things that I said in the room pre-market yesterday is that these geopolitical, tensions when oil goes like this, it's happened before, and more often than not, it's a profit taking. People come in and maybe it rallies a little bit more, but it's usually, and I don't. It's again, it's not 100% of the time, and you have to think about probabilities. But a lot of times when there's geopolitical things, it's becomes a like kind of one-off spike in oil. Um, if there's something that's really pressing, going on, that's going to be, a continuation, then you've got something more to worry about. And I think the way to kind of play this, if you were under a position like I was in energy, I didn't own any energy names going into Monday. You could think about owning some out of the money OIH calls or XOP. And if something crazy happens in these names, you've got some exposure to it. And where you're not, we saw a lot of like October out of the money OIH calls go up for around like 45 cents. I took those, and I think that's a great way to play it. Don't let anybody fool you. The guys on CNBC were talking about yesterday how there was a whole bunch of call buyers last week in oil names. First of all, they're cherry picking because there's been call buyers in energy for the last 6 months, and 99% of them have not worked. So don't let these guys. It's a really big disservice to retail investors to listen to these guys, a couple guys who talk about option activity on CNBC. Sorry, I have to say it, but they've been talking about option plays in energy for the last 6 months, and none of them have worked. So for them to kind of come on and talk about how there was a whole bunch of positioning, no, there wasn't big positioning in energy. There was an XLE call buyer that hit about 3 or 4 days ago last week. But that again, that's par for the course. We always, if you do your homework, you could see that there's always out of the money call buying and stuff. So for those guys to jump up and down and talk about all the energy call buying and how they caught it and so forth, is really a major is really not being truthful to people, in my opinion. And I'm happy to talk to anybody about that, but we watch the tape every day, and that's just how it is with energy call buying. There was no secret signal by watching the tape. It's just a regular occurrence that you see out of the money call buying in individual names. So I don't get why they're trying to say that they called something. But anyway, I try to be as transparent and honest with people. And when I see somebody doing that on TV, no matter what platform they have, that's doing a major disservice to investors. Trying to tell them that option activity is predictive. There's plenty of trades that we see every day that just don't pan out. So anyway, and plenty of those of trades that they mentioned too. So anyway, I'll move on. So what else? The FANG stocks got going today. Apple, which is technically, I guess, not a FANG stock. Again, waited till the end of the day. I've been trading just very small. Traded a little bit of Amazon. I'm kind of waiting for this to get going. It seems like these FANG stocks, once they start going, you hear more about regulations. But I would be interested to see if Amazon, it just kind of closed right around that bottom of value for the week, 1822. So I think that'll be interesting if that can hold there. So again, we've got a big day. Things can kind of change around, but I'll tell you, it does feel like this market wants to go higher. The way that things are kind of, what we've seen like in the market, especially the way that the market reacted yesterday to the oil, big oil increase. The market just kind of shook it off. Kind of just feels like the market wants to go higher. The put call, I want to talk about, the positives and negatives. I didn't mention this when I was talking about the repo rate. No stress in this high yield. This is another area to watch. Talking about if there's any stress in the system, because again, I do think the credit market knows ahead of the equity market, but no spike in credit risk. So again, we'll keep an eye on that, and we'll keep an eye on what happens tomorrow. Keep in mind for so by the way, this is the put call ratio. A little bit too bullish today. I think 0.77. Now it was on the bearish side yesterday. Again, people use this kind of a contrarian when it gets too far in one direction. People try to game this a little bit. So that's it, in terms of, let me just mention a couple things with today's option activity. A lot of playing in the casino names today. So I'll mention 3 or 4 trades that we saw in option activity that were interesting. LVS, and I did check, there's a couple big blocks of calls that went up. 13,000, and then some follow-through action in some other. Those were January 60 calls, but we also saw the October 60 calls trade a couple times that looked like they were bought. This name had a good day from low to high, and also MGM. A lot of October calls traded today, so I don't know if there's something up with the casinos. Maybe it makes sense to have a little bit of a position in one of these names. And Caesars also saw some calls yesterday, even though that's a deal name, but those are names that saw some action. Also, things like RCII saw a lot of calls. This looks to me pretty coiled up here. Again, has some work to get outside of value, but I did take that trade. Also, some of the semiconductors did okay today too. This is a name that I talked about on Bloomberg TV yesterday, live at 3:20 yesterday on their Option Insight program. I like this. This is trying to break out, so I'm paying attention to that. Also, the defense names acted really well today with things that are going on, possible speculation with Iran, but a bunch of names. What's the one? LHX. I hate this new symbol for this company, but very strong. Almost breaking out to 52-week highs. A couple other ones that I've been watching is Heiko. KTOS is another one. I think which just had an inside day. So this name was really strong yesterday. It gave back 3%. So perhaps a better entry. Giving you again, a testament to not always having to chase. So anyway, that the video is 18 minutes long. That's long enough. I went on for a little bit here. For tomorrow, just keep in mind what the averages are of when Powell speaks. It's usually not so good. So, my take for that is, have some cash available. If the market sells off on some sentence that he says, the market is always super sensitive and takes things out of context when he speaks. So the last time he referred to the interest rate cut as a mid-cycle adjustment, and the market freaked out, and he had to backpedal and not say that. So it seems like he has a tendency, and the averages are what they are. The majority of times when he has that speech after the FOMC, it hasn't. There's been more times when the market sells off than when it goes up after that meeting. So we'll see what happens. All right, guys, and I don't want to say so. We'll see what happens, but have some cash available. I'm not going into this meeting. I was pretty much trading light all day today. That's how I'll look to trade tomorrow and position a little bit lighter into that. I'll have positions on, but I'm going to be on the more cautious side, just because you're playing with the averages of how Powell's speeches turn out. All right, guys, that's it. Have a great night. See you tomorrow.